Good afternoon, this is Tom Asper with the Viper Report. It's Monday, August 17th, about 2 o'clock Eastern Time. In my last video, at the start of the month, I talked about that the strength of the advanced decline line, especially in the S&P 500, indicated the S&P was going to make another new all-time high as the AD line was leading prices, which is often very positive behavior. In a Forbes.com contribution called Time for a Dollar Rebound from August 9th, I talked about the markets, of course, and also about the dollar. This chart is of the dollar index futures, showing that it dropped down into the weekly Stark bands and formed a doji. That was suggesting it was very oversold and could bounce, but certainly indicators like the Herrick Payoff Index, which uses volume open interest to determine money flow, which you can see has been negative for about the past 3 months, shows no signs of a bottom yet. It is important, if you're an investor or a trader, that you know some of the relationships that exist between the markets. That was illustrated in this long-term chart of showing crude oil in blue versus red in the dollar index. So you can see that, for example, in 2008, that was the sharp rise in crude oil, and it was accompanied by a very weak dollar. So it's important to know all these relationships. That's one of the things we try to teach in the Viper reports. This is the position table from the Viper ETF report from August 5th, showing that we closed out part of our gold position. We left a little on the table, but that's okay. We'll stick with our plan. We made a 14.3% profit there. Also, we'd closed out a position in XOP. I didn't like the technical action. Turns out that it went higher after this exit, but that's what I like to do. If I have a position and it doesn't perform the way it's expected to, I'd rather take a very small loss and not get stopped out. Our second profit-taking level in the SLV was also hit. We got out at 26.31 for almost a 59% profit in just about 3 weeks. We also closed half of our trading position in the SPY at 334.84. We're still holding on to the other 50%. This is the current table from today's report, showing our core position in GLD is now up 52%. Long-term healthcare is up pretty good, and also we're in materials, staples, medical devices, the financial stocks, IWM. This position in the Vanguard FTE developed markets other than the US is acting pretty well, and we're also still holding a trading position in the Viper Trust. One of the things we've added to the Viper reports lately has been a detailed hourly analysis, generally of the SPY or the IWM. You can see that what I try to teach people here is that we had a very nice run up in the IWM. We decided to hold our long positions. This looks like a pretty normal sort of pullback, like a flag formation. So once it gets above this level here, which it's testing right now, Monday afternoon, it should signal another move to new highs with a target of here around 162 or so. OBV is positive. This chart from the dollar article shows why I was pretty confident that gold and the GLD would see a significant pullback. On Friday, August 7th, the gold futures made a new high in early trading and then reversed to close lower on the day. You can see that the monthly pivot resistance, this red line, was also tested that day, and we've had a pretty significant pullback. We'd gotten out of our GLD positions, part of them anyway, a couple days earlier, but that's my style. I like to exit on strength. Even if I don't catch the absolute high, I'd much rather sell when the market's going up than when it's going down. This is a summary report from today's Viper ETF report. If you want a copy, just drop us a line. We'll send you the full thing. It's pretty extensive, 7 pages today. And it shows you the table of the SPY, the QQQ, IWM, DIA, and NYSE composite, showing you where the 20-day EMA is, 20-week, weekly Stark band, both plus and minus. The weekly AD line, you can see as of last Friday, only the QQQ AD line was negative, and also shows you the distance above the 20-day EMA. As I explained in my reports, that often gives you a target on the downside. The last time the SPY got below its 20-day, we went long on the open, which was sharply lower, but the market closed that day higher. We're also quite a ways away above the weekly EMA, so that's a sign that the risk is increasing. So we're getting a little more cautious as we head into the end of the month. We had a number of new recommendations for both stocks and ETFs in this morning's report. And if you'd like to learn more about technical analysis, you can go to the Viper report and look at this special offer for traders and investors. It's 90 minutes one-on-one, and we'll design a quick course to help you get better in the year ahead. Of course, if you're interested in specific advice, you can go to the Viper ETF report or the Hot Stocks report. As most of you are aware, it's only $34.95 a month. You get at least 2 reports a week, plus 6 trading lessons of $45 value. So that's all I have today. If you have any questions, you can always email me at tom@viperreport. Hope you have a great week.